QuickBooks Pro Desktop 2021 Budgeting Overview. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're thinking about the budgeting process within QuickBooks now. Now you can enter the budget into QuickBooks. Oftentimes, however, it's useful to be using Excel as well to construct the budget and then enter that into the QuickBooks. So let's just think about that process first, and then we'll go through that process in future presentations. When we think about a budget, we're usually thinking about the timing statement mainly, meaning the balance sheet and income statement are our two main financial statements. Let's open those up and think about then the timing statement being the one that measures performance, that being the income statement or P&L, profit and loss. So I'm going to open up our financials, go to the reports drop down, company and financial. We're going to take a look at let's go to the balance sheet first, and then we'll make this, we've entered 2 months of data, so I'm going to say 02/28/21. This is where we stand after that 2 months of data that we have entered, plus the beginning balances that we entered at the beginning of the process. Then we're going to go to the reports drop down, company and financial, profit and loss standard. And we could see this for the 2 month time period or for the 1 month. So I'm going to do it for the 2 month time period, 01/01/21 to 02/28/21. So we've had 2 months worth of data thus far. This is what we've done for that 2 month time period. When you're thinking about a budget, we're thinking, of course, out into the future. How can we budget and plan what's going to be happening in the future so that we can make the best decision-making process that we can? Obviously, we don't know the future, so we need to basically have a plan so that we can have something to aim for, something to shoot at, and then we're going to continually go through that process, projecting out into the future, and then moving into the future and trying to compare and contrast what has happened compared to what we expected to happen. So within the QuickBooks system, great system for us to input the data into the system, because then we'll be able to run reports that will be able to compare what actually happened to what we budgeted to happen. And that's going to be one of the major benefits you have within the QuickBooks system, is to run those types of reports, comparing actual to the budget. So how do we generally come about a budget? How do we put together a budget? To put together the budget, I would use Excel to help with that process and then enter it into QuickBooks so that you can run reports out of QuickBooks comparing the budget versus actual more easily. In order to use Excel, we'll typically be exporting or starting with some kind of report from the QuickBooks file, meaning you want to export basically the chart of accounts at least, if not the actual financial statement, so that you can use that to then enter the data into the Excel system and then back into basically QuickBooks if you're going to use the QuickBooks for projection and comparison purposes in the future. And normally the report that we'll be looking at then is going to be the P&L report. The standard process for a budget is to look at what happened in the past, usually last year, right? We're usually going to be saying, okay, it's January, let's start to look at our budget. Let's look at the last year, let's see what happened last year, looking at the performance report, that being the income statement, because that's the timing report that measures performance. And that's at least the starting point that we're going to then use to go forward. And then you can think about all the other things that are involved in budgeting, like what's the economy going to do? How do we expect to grow? What if we have more advertising or less advertising? And, we invest in machinery and whatnot. You can think about all those types of things that would be industry specific, which will vary, of course, from industry to industry. But the typical starting point will be past data. We're going to start from the past data, look at past performance, and that'll be our starting point, and then make projections on how we can improve on that by doing things differently in the future, and then project out what will happen in the future. Now, in our practice problem here, we only have 2 months of data. If you're a new company and you haven't done anything in the past, you don't have any past data, then you're going to have to make projections from nothing, right? You have very little to go on, and you might be adjusting your projections all the time because you're kind of charting your course as you go. But of course, even as you do that, you want to make the plan as concrete in your mind as possible, while allowing for adjustments to happen, right? So that you're aiming at something, so you know which direction you're moving. And then when you see a new direction open up that might be better, then you can make that alteration as you're starting and change your focal point to whatever it needs to be. If you're more of an established company, then your budgeting process might be more standardized. So we only have 2 months of data, so we will basically be taking a look at these 2 months of data and kind of imagining as if we're back before these 2 months happened, so that we were projecting out to these 2 months, and then make a budgeted report for the entire year, January through December, for the income statement, so that when we put it into QuickBooks, then we can do some comparison reports for January and February to the actual data that we haven't put into the system, and we'll see the projected reports that we can then do for the entire year going forward. Now, you can also do reports like you can update your budget anytime you want. You might decide to always kind of update your budget and look out at 12 months all the time, or you might have more of a static budgeting process. Once you get into the idea of creating a budget, then there's a bunch of different theories on how best to make your budget. But just a basic budget is worth thinking about, and you want to budget basically your performance on an accrual basis and also a cash flow basis to make sure that you have the cash flow going forward. Now, then the balance sheet, we can also budget for the balance sheet, but the balance sheet is not the performance report. The balance sheet is going to be where we stand at a particular point in time. So, for example, if after the time passes, we would have earned revenue, net income rolls into the balance sheet. That's going to be part of the equity section of the balance sheet. So the balance sheet is kind of a little bit more confusing to think about, because we're not thinking about how we did over time. We're thinking about where we're going to be at the end of a certain time period. So we're thinking about where are we going to stand at the end of the month or the end of the year. So we can look at that in a little bit of detail. If you want more information on how to basically construct a balance sheet in a budgeting process, you might want to look at it. We have courses on budgeting processes, and you could take a look at those. But the major budget that you're going to be, and we will construct a budgeted balance sheet here just so we can look at that. But the major budget that every company wants to focus in on is typically going to be the performance budget, and then a more complex budgeting structure will then look at that and measure what the effect on the balance sheet will be periodically at the end of the month and or year to help your planning process. So that's what we'll do going forward. What we'll do going forward is we will export the reports for the time period that we have input into the system. We're going to kind of imagine that they are the reports for the prior time period, so that we can then use them in Excel to construct a year's worth of projection that we will construct out in Excel, and use Excel to kind of help us with that projection process. Then we'll take that data and put it back into the QuickBooks system, so that we can then see how QuickBooks allows us to run comparative reports for the first 2 month time period. We'll be able to compare actual versus budgeted reports, and then we'll see how we can project out into the future with the 12-month projection that we made with the income statement report. So that's what we will do in future presentations.